All right, earnings season gets into full swing tomorrow with several of the big banks reporting, including JPMorgan, Citi, and Wells Fargo. Joining us now with what investors should be watching, Macrae Sykes, portfolio manager at Gabelli Funds, where he manages the Gabelli Equity Trust Fund and the Gabelli Financial Services Opportunities ETF. Good to see you.
Thanks, Mike.
So a few themes. First of all, the group hit hard yesterday on this move up in bond yields and reduction in Fed rate cut expectations. How do each of these banks stack up in terms of their exposures to funding costs and all the associated things?
Right. So clearly, in the short term, we're being driven by the rates and the outlook for the Fed. But I think as we think about the reporting season set to kick off tomorrow, in general, it should be a fairly positive outcome, I think, for the major banks. So you just think about the aspects of that going into this year. Even though we'll have a down comparison year over year, the contribution from asset and wealth, given the record levels, will be good. We're seeing capital markets pick up, so record levels of corporate issuance, up 80% year over year. So that's contributing to that. And then, we're going to work through the NIM component, and we should get guides. JPMorgan at $90 billion, we expect a little increase there. So positive kind of outcomes from the earnings results and more momentum going into 25 in terms of accelerating earnings. Yeah,
the net interest margin guidance I know is going to be, sort of the front and center, and it varies by bank. Big over small has been a real theme. Obviously, the regional banks have not been as advantaged. What about within the big banks? I mean, JPMorgan has so outperformed the rest of the group. Where do you actually prefer at this point?
Right, in general, the funds that we manage have favored the bigger banks, and I think that goes to the diversity of their revenue stream at this point. More competitive cost of funding, and just a better capitalization and so on. So that is for this year. Obviously there's a disparity in terms of valuation between some of that and the smaller banks. But going forward within the big banks, we like Wells Fargo. It's still trading at almost 1.3 times tangible book for 2025. Improving operations, simplifying the business, and then we have an ultimate catalyst in the asset capping removal.